Good afternoon, ladies and gentlemen, and I'm very impressed there's still quite a few seats taken when the sun is shining out in Paris. I will try to be short and to the point, but first of all I want to thank ICMA and particularly Brian for the opportunity to address you today. It's a particular pleasure to be here in the Palais Brongniart, a place steeped in history, and in its 200 years history, this building will have been a spectator to some of history's most turbulent times, I think. And today, times are again turbulent. When I spoke at last year's ICMA AGM, the cautiously optimistic new normal of the post-pandemic era had begun. But equally, war had just broken out on the European continent. The future looked uncertain. We all wondered how the financial system and our broader society would cope. Today, the tightening of the financial conditions globally continues to weigh on economic activity, and inflation remains very high. Although recent growth forecasts no longer point to a deep recession, and inflation is showing signs of moderation, price growth may remain elevated for longer than previously expected. Against the backdrop of economic uncertainty, investor sentiment remains weak. Inflation, which in October reached its highest level in the EU since the early 80s, acts as a drag on real investment returns and contributes to falling household savings. The confluence of high risks with fragile market liquidity makes for a very uncertain and volatile market environment. ESMA, in line with our core duties of preserving financial stability, orderly markets, and investor protection, maintained our market monitoring through these turbulent times. Our latest Trends, Risks and Vulnerabilities report does focus on the continued uncertainty and the risks arising from high inflation, global tightening of financial conditions, and the geopolitical environment. It also demonstrated the materialization of peripheral risks linked to leverage and liquidity, together with the growing concerns over business practices in the crypto space. Although economic sentiment has become more positive in early 2023, there is clearly no room for complacency. As such, ESMA is keeping the overall risk assessment across the whole of our remit at the highest level. The current testing market conditions mean that we must all we can to continue to build a resilient European financial system. A system that is capable of providing the capital our economies need to fund growth and to withstand sudden economic shocks. My belief is that thanks to the considerable work done by all parties to strengthen the regulatory and supervisory framework since the 2008 financial crisis, capital markets are in a much stronger position relative to where they were 15 years ago. This is true for the international reform efforts under the global leadership of the FSB and IOSCO on the securities market side. It is also true for the European efforts to strengthen financial sector regulation and supervision, a part of which was the creation of the European supervisory authorities, including ESMA. However, we clearly can't rest on our laurels. Today, we're faced with new challenges, whether that is, as I said, the high inflation environment impacting households and their investments, the energy crisis provoked by Russia's aggressive war on Ukraine, or the risks to investor protection and financial stability coming from new technologies, typified, for example, by last year's FTX scandal. In the face of these challenges, continued action to strengthen our capital markets regulatory framework and supervisory practice remains crucial. I know I preach to the converted here when I say that transparency is for me a key tenet of the solid capital market that we need, allowing price discovery and price formation. With ESMA's mission of promoting stable and orderly markets and enhancing investor protection, we have stood firmly on the side of pushing for more transparency. Let me be a bit more concrete with a couple of topical examples at the moment. The MIFIA review, for example, foresees the introduction of the much anticipated consolidated tapes, which I know has been long advocated by ICMA and its members. ESMA will help to build these consolidated tapes. As a markets regular, I'm certainly very pleased to see a system which should streamline and centralize market data, covering the price and volume of securities being traded across the European Union. A streamlined, consolidated tape will bring tangible results by consolidating information on prices and trading opportunities, and so making it easier to identify pools of liquidity, particularly important in these times of restricted liquidity that is available in quite a few of the markets in normal times and certainly in stress times. In support of the same objective of transparency, the European Single Access Point, or ESAP for short, will make public financial and sustainability-related information about EU companies and EU investment products. It will make this information available in a central location, allowing for consultation and comparison of the data by any investor. ESMA has been given the central role of the creation and the maintenance of this ESAP, which will give investors the information they need to make informed investment decisions and also provide companies with better visibility across the European Union. Finally, when it comes to listing on capital markets, I've long believed that the regulatory framework we have in the EU is overall effective. Having said that, the proposed simplifications that have been put forward in the listing and post-listing process through the Listing Act is very welcome, making it hopefully the case that public capital markets will become even more attractive to be used by EU companies. It is one part of improving the access to a diverse range of funding and investment possibilities, particularly in the context of the funding challenge that the dual transition to a sustainable and digital world is entailing. It remains important that listed capital markets, but also other means of non-bank financing, are strengthened in the EU. In that context, I'm also really pleased to hear that for some reason, capital markets unions seem to be getting a second wind at the moment in the debate. We need to build effective and attractive capital markets in the EU. That means continuing completing the legislative measures that are already underway or will be forthcoming shortly, but also keeping our ambition levels high to ensure that EU companies and investors have a strong, liquid, and open capital market to raise funds and invest in. When we talk about capital markets, we mostly think of traditional financial markets, exchanges, brokers, post-trade market infrastructure, and so on. But financial markets are changing rapidly. I briefly alluded to the FTX scandal in my earlier remarks. However, I'm certainly no Luddite. I firmly believe it is important to welcome digital innovation, where it can bring benefits to the EU financial markets. Digital technology has already and continues to shape the way capital markets operate and the way intermediaries provide financial services. Firms across the financial sector are increasingly linked digitally as they transact and communicate electronically. This technological innovation challenge is there for all existing market practices and players. It has the potential to disrupt market structures with both positive but also negative effects. On the one hand, these technologies provide new business opportunities and ways to offer better, cheaper financial products to consumers. On the other hand, they should be harnessed in a way that does not undermine our capacity to regulate and supervise Europe's financial system. This is precisely the aim of MiCA, the Markets in Crypto Assets Directive, the first comprehensive regulation of a previously unregulated crypto asset market in the world. The new EU MiCA regulation is setting up a framework for this market that will bring legal certainty to the regulatory treatment of crypto assets, while also introducing appropriate levels of investor protection and market integrity. I generally consider that to be a very valuable development. While the evolution of crypto has led to broader participation in financial markets in recent years, it also presents unique risks, particularly to retail investors. Having a common EU-wide regulatory framework for this new activity is important. We will, as ESMA, certainly work with the national competent authorities towards a common regulatory regime and converged supervision around altogether about 5 main areas: investor protection, governance of crypto asset issuers and providers, market integrity and cooperation between NCAs, transparency, and record keeping and reporting. This will require the delivery of a number of guidelines and technical standards over the next couple of years. Equally important, ESMA has already been starting to bring the national competent authorities together to discuss common day-to-day authorization and supervisory challenges, building strong coordination, cooperation, and convergence. At the same time, MiCA has certain limitations. For a start, it is inevitably limited in geographical scope. Service providers outside the EU have a prominent role currently in crypto markets, and it seems likely that they will continue to do so. If consumers in the EU seek out the services of providers based outside the Union, they will obviously be outside the scope of MiCA as well. But moreover, even among crypto asset providers within the EU, the protection for investors are not at the level of those of MiFID, nor are the market integrity rules as stringent as those in the market abuse regulation. In short, crypto markets will not suddenly, overnight, turn into mature and established securities markets, and it's important that we make that distinction clear to investors. Another difference is the surveillance capacity and capability that authorities have in traditional financial markets compared to those crypto asset markets. In traditional markets, reporting and market surveillance have been developed and strengthened over many years. Competent authorities have extensive information at hand to supervise firms and assess risks. This is not the case in crypto markets. And in any case, I assume crypto markets will continue to evolve quickly, and therefore we will need in any case to make sure that the regulatory regime keeps up with that. The challenges presented by the digital transition of financial services leads me to another related topic. With the digital transition, but also within the current geopolitical climate, concerns about operational resiliency have moved up the agenda. The new EU regulation aims to improve the EU's readiness and defenses against all types of ICT-related disruptions and threats, given the ever-increasing dependency of the financial sector on software and digital processes. DORA, the Digital Operational Resilience Act, is now in force. It's an important piece of legislation designed to address the fundamental threat of cyber attacks and ICT disruptions in the EU financial sector, and we are about to publish across the 3 ESAs a number of consultation documents to specify some of the more detailed regulation under DORA. And we look very much forward in getting your feedback on that. Cyber risk is perhaps an inevitable side effect of technological innovation, And it is in part driven by the online provision of financial services, by the reliance on vast data sets, and by growing operational interconnectedness across and beyond the financial sector. Digitally based and highly interconnected financial infrastructures result in greater attack surfaces for malicious actors to target and provide channels through which an operational incident may propagate. At the same time, the current global instability that I have just referenced heightens the risk levels in this area. As global events and the latest technological changes have both shown us recently, we live in a volatile and increasingly interdependent world. In ESMA, we are very conscious that the world does not stop at the border of the European Union. We have de facto a global financial system, and therefore we need global consistency. And with that, I lead over to Jean-Paul. While this might make strengthening financial markets more difficult, it also makes it even more important that we work together. We know that well-developed, efficient, and stable capital markets will play an instrumental role in helping us to confront the various geopolitical and technological challenges. Such effective capital markets will also help us to meet various long-term societal needs, including economic growth, the prosperity of citizens, and financing the green transition. Therefore, we need to keep adapting and moving forward. I'd like to conclude today with the following. Let us not lose sight of the common goal to create strong capital markets that can serve our economy and our citizens, both at EU and international level. And thank you very much for your attention. And with that, I hand over to Jean-Paul for the global perspective. Thank you.